For a long time, Bitcoin has been the equivalent of an on-chain pet rock, cash that you would stash under your mattress, an apartment that you would own and leave vacant. In other words, it is an unproductive asset. This was until innovators realized this and found ways to earn yield on it, by wrapping it on other chains so that it can be put to work. This is what we see on Ethereum with wrapped Bitcoin. Then Stacks came along and engineered smart contracts on Bitcoin. Alex Labs builds on this by offering financial services like lending, swapping, and fundraising, positioning themselves as the Goldman Sachs of Bitcoin DeFi. This name makes sense, seeing that their experienced team has a background in traditional finance, specializing in quantitative trading. In this video, I'm going to explain my bull thesis on Alex Labs, go over their tokenomics, cover price predictions in the bear, base, and bull cases, explain the risks associated with the project, do an analysis of their team, and then wrap it up by giving Alex a comprehensive moon score. Before we hop into this analysis, I am not a financial advisor. Nothing in this video is financial advice. Everything is for educational purposes only. Crypto markets are extremely risky. Please consult a financial advisor before making any financial decisions. Thesis. Alex is a conglomerate of financial services on chain. They have their decentralized exchange, their Bitcoin bridge, their lending and borrowing services, their launchpad, and much more coming in the future. Later in the video, to get an idea of what this project could be worth, I'm going to add up all these lines of businesses and go over my assumptions. Alex stands to benefit from the Bitcoin ETF pumping up the price of Bitcoin and the on-chain volumes that Stacks is seeing right now. More volume equals more fees, which equals more value accrual to the Alex token. Alex can be also viewed as a beta play to Stacks. When people bridge to Stacks, they are likely here to do one of many things that Alex provides. For example, swapping their Alex into other coins on the Stacks network, including all the meme coins we've been seeing recently. Take a look at Alex's performance versus BTC. It is more volatile in both directions. Alex's business model has been proven by many times over on other chains. Here are a few of the many projects that I'll be comparing Alex to later in the video when I cover my price predictions. For decentralized exchanges, there's Uniswap, PancakeSwap, Radium, Trader Joe, and QuickSwap. For bridges, there's Wormhole, Synapse, the other native bridges that layer 1s have like Avalanche Bridge. For lending, there's Compound, MakerDAO, Aave. For launchpads, there's MakerDAO, Radium, and Seedify. For Oracle services, there's Chainlink, Pyth, API 3, and Band Protocol. There are many examples of these business models working in the past. If you're enjoying this video, make sure to join me and hundreds of other crypto investors in the MoonMath Discord. Now let's take a look at Alex's tokenomics. Tokenomics. Alex has a very simple tokenomic model. The token model is similar to a lot of DEXs where the token is used as a governance token and is used to incentivize liquidity provision. In the future, they could put through a vote to have those fees accrue to the holders in the form of dividends. This would be massive. Staking the tokens also gets you access to Launchpad releases. When you stake Alex into the ST Alex, which is staked Alex, you'll start receiving a power token. This will give you access to launchpads in the future that you're interested in. As you can see right here, I've already gathered about 800 A-Power tokens. So, in the future, if projects building on Stacks want to distribute their tokens to Alex's core community of liquidity providers and stakers, they will have the ability to do so. This is because in order to participate, you need Alex tokens, Stacks tokens, and a third token called A-Power, which we just went over. This is a non-tradable, non-transferable token that can only be earned through staking Alex or yield farming on their platform. This mechanism gives another huge incentive for people to interact with and buy the Alex token. There are 1 billion tokens, and they are distributed 20% to the foundation to be allocated to the community reserve pool to support the ecosystem, early adopters, and future development of Alex. 50% is reserved for community staking of Alex or liquidity tokens to earn Alex. 30% goes to employees, advisors, early investors, and the founding team. The token emission schedule looks like this. Check it out. All right, now let's go over my price targets. As I said earlier in the video, the valuation for Alex will come from adding up all the valuations of all their lines of businesses. One of the ways to value them would be to model out the earnings based on a set of assumptions and to do a discounted cash flow analysis. But because this is crypto, I think the better way to do this is to look at comparables from this cycle and past cycles and judge based off that. So for example, decentralized exchanges. I'm going to look at the volumes of the comparables, the fees they generate, their TVLs, and their market caps relative to those metrics. Before I go over my price predictions, one of my assumptions I am making is that the multiples that are assigned to these coins off the back of their TVL and volume will be significantly lower this cycle, as the hype from DeFi has died down a lot from its peak in 2021. But also because BitFi is a new narrative. I can see valuations being higher than their EVM-based counterparts. The bulk of Alex's market cap is going to be built off the back of their decentralized exchange, so that is where I'm going to spend most of my attention. Now let's take a look at my bear case. Bear case. The Stacks ecosystem is downstream from Bitcoin. If Bitcoin doesn't perform well, it makes it harder for BitFi projects like Alex to perform well too. My bear case for Alex for this run is for their token to go to $1.50, putting their market cap at about $1 billion. A few things would have to occur for this to happen. Bitcoin would struggle to push far past its all-time highs, maybe reaching a maximum of 100 to 120K. This would take volumes away from L2 such as Stacks. Another issue that could happen is that Stacks doesn't initiate an ecosystem fund or help meme coins onboard easier to the platform. There's also been a ton of projects bidding for attention and capital, such as Blast, a new L2 on Ethereum. It's extremely difficult to stand out now. People also usually go with more lending methods of borrowing against their tokens, with projects that have been around for years, such as Comp or Aave. Nakamoto could also get pushed back, and lending won't be as ready on the Alex platform. And currently, Stacks is slow, which would be bearish for Alex if Nakamoto never goes through and 5-second block times are pushed even further out in the future. If all these things happen, I can see some comparables to Jewel, aka DeFi Kingdoms from last cycle. The volume on DEX, 100 million daily. The TVL, 800 million. The multiple, 1.25. Valuation, 1 billion. Circulating supply, 704 million. Token price, $1.42. I want to reiterate that Alex will be speculated on just like Stacks is speculated on, so it could still reach a good valuation without too much traction. If we look at other DEXs in the past that were hyped, this was the case. Look at Jewel, the intersection of DeFi and GameFi in 2022. 115 million in daily volume with 775 million in TVL and a $1.3 billion market cap. This will be at the intersection of BitFi and DeFi. Lots of tailwinds. There's no better positioned projects on Stacks than this one, in my honest opinion. Bitcoin coming to get lent out is going to be big. In this bear case, the metrics on their lending books, Launchpad, Oracle services will be negligible. Their lending book will not be online until after the Stacks Nakamoto upgrade anyways. All right, let's move on to the base case. My base case is that Stacks will do similar volume to Matic last bull run. On Matic, QuickSwap was the premier decentralized exchange. It was doing 400 million in volume per day. Stacks is realizing that they should do similar strategy and try to get coins to come over to their chain. For example, look at Radium on Solana right now. They're doing incredibly well because all of the meme coins on Solana are launched and traded on Radium. This is how Stacks is going to bring even more attention over to the chain. And then, inevitably, money will flow to Alex once this happens. What big coins are there on Solana that are true fundamental plays? Not too many. DPIN has been the main focus for that area. People are buying WIF and other meme coins. It's basically just been a bonanza of meme degeneracy. This is what's driving all the trend. All right, so we're going to begin with an assumption. The volume on stacked DEXs is going to account for about 30% of the total volume on Solana DEXs. Seems like a fair amount. Currently, that's about 1.5 billion on Solana. So about 30% would be 450 million. Alex is going to capture 95% of this, which would equate to 430 million daily. The total value locked, TVL, stands at 1 billion. Let's go through the volume multiple. Just as companies see their valuation multiples increase as they grow due to reduced risk, we'll apply a similar logic here. For a current market cap example, compare the multiples of Uni to Sushi and Joe to Pangolin on the Avalanche chain. We're going to assume a market cap to TVL multiple for Alex will hover around 1, reflecting its strong growth prospects. Market cap, $3 billion. The coin price for this target, $4 in this case. Base case, $4. This hinges on the assumption that the Nakamoto upgrade passes and enhances the loan book significantly. Given the current environment, competitors like Comp and Aave have market cap to TVL ratios around 0.15 to 0.18. In peak bull markets, this soared to between 0.33 and 0.55. We estimate a 0.25 ratio for Alex, projecting an $8 billion capital inflow, enhancing the Alex token's value by $2 billion. All right, let's get to the exciting part, the bull case. I think if the stars align for Stacks and Alex, this could go to $25 or 72x from here. I know this might sound crazy, but hear me out. First thing that needs to happen is the Stacks ETF. And this isn't that crazy of an idea. It's definitely within the realm of possibility because Stacks, the STX token, is the only approved SEC cryptocurrency. If you want to learn more about Stacks, check out my video that I published a few weeks back. This is an incredible project. With the Stacks ETF coming through, I could see volumes going to 2 to 3 billion per day. This would attract 5 to 7 billion in TVL at a 0.8 market cap to TVL ratio. I estimate 0.8 because the team isn't going to be as highly valued as the Uniswap team, considering Uniswap was the first mover. But Stacks and Alex are all on the premier chain, Bitcoin, so that deserves a premium in of itself. This DEX activity should put it in line with a $4 billion market cap. Now let's take a look at Alex's second line of business that I think will make a behemoth. Alex's lending book has the ability to drive most of the growth for this protocol. With the current high interest rate regime we find ourselves in, these loans will generate a ton of value for the token holders. For reference, BlockFi has $15 billion in assets under management and Celsius with $12 billion. Currently on the biggest DeFi protocols, Aave, MakerDAO, and Compound Finance, a massive amount of loan book volume. In the past three protocols were looked down as great investments because the market wasn't paying high rates on borrowing. But now the market has shifted, and these books are getting higher valuations because of the money they are able to generate. Just looking at these charts, we can see how the revenues have changed and how these protocols are starting to get repriced. One of the big advantages to selling on B2C is the reduction in counterparty risk, which is something that co-founder of Alex loves to talk about. So let's take a look at some of the numbers to get an idea of how Alex holders can benefit from the great positioning of this protocol. There's a ton of Bitcoin sitting idle, right? It's doing nothing, and it could generate yield. Coinbase alone has $15 billion in Bitcoin from the BlackRock ETF. Many whales are also interested in Stacks, such as Tron founder Justin Sun. He's got billions of dollars in Bitcoin. Last bull run, centralized services that did this had tens of billions in assets under management. Let's say in the next couple of years, Alex attracts $35 billion in capital for their on-chain lending book. At a 0.3 multiple, this will translate to $10.5 billion in value for their loan book. Remember, Bitcoin is also going to go up, so their loan book in BTC terms could stay the same while nominal values go up. Adding up their loan book index valuations brings us to a value of about $25 per Alex token, with a circulating market cap of about $17 billion. All right, let's go over the risks. Investing in any venture comes with inherent risks, and Alex is no exception to that. There's a possibility that it's currently overvalued. A critical issue is Alex's inability to attract significant TVL in Stacks, showing minimal growth in this area over the long term. Additionally, despite the onset of the bull market, Alex's trading volumes seem to be low, a situation exacerbated by the delay in Stacks Nakamoto upgrade. Comparing Alex's volume with other decentralized exchanges reveals that the market does not regard it as a leading protocol. This underperformance is mirrored in its weak performance on platforms vital for community engagement, such as Crypto YouTube and Crypto Twitter. The focus on Alex's team on product development over marketing has limited its visibility from crypto users. There are several external risks as well. One is the preference for cryptocurrency holders for centralized services like BlockFi over on-chain solutions for yield generation. Another concern is the potential for investors to choose ETFs with tax-advantaged accounts such as Roth IRAs. This could sideline platforms like Alex if entities like BlackRock restrict yield-generating activities on these assets. Alex's platform, still unproven in battle, may deter users seeking more established and trusted projects for lending. Furthermore, with stacks lacking the proven reliability of other platforms and facing competition from Ethereum's ecosystem for lending opportunities, users might opt for wrapping their Bitcoin into WBTC for use in Ethereum's DeFi ecosystem instead. An impending threat comes from well-established protocols potentially migrating to stacks, such as Uniswap for decentralized exchanges or Aave for lending. This could overshadow Alex. Next, we'll dive into the composition and strategies of the Alex team. All right, let's analyze the team. This team is stacked. The Alex Lab team is distinguished by its robust expertise in traditional finance, drawn from some of the world's premier institutions. Dr. Jens Shu, co-founder of Alex, served as a managing director of quantitative investment strategy at Morgan Stanley. Rachel Yu, also co-founder of Alex, brings expertise from Goldman Sachs and JP Morgan, specializing in structured products and financing solutions. Chan An, the CTO at Alex, holds a PhD in financial structuring and was the head of structuring for Goldman Sachs equity derivatives in Hong Kong. Collectively, they form a team of profound knowledge in financial structuring from the TradFi sector. This depth of experience in structured finance positions Alex Labs advantageously for innovation within decentralized finance, which is currently exploring ways to integrate more complex structured products on-chain. Alex is making moves and they are everywhere all at once. All right, let's go over the Moon score. First, let's start off with the fundamentals, tokenomics. I'm going to give this an 8 out of 10. Tokenomics are strong. There's no crazy overhangs or people waiting to dump. The launchpad was designed really well, but there's no fee share yet, so points are off for that. It's a strong 8 out of 10. Narrative, 8 out of 10. Alex has a great narrative. Backs off all the Bitcoin ETF FOMO that is happening right now, and it's positioned well for all the inflows coming. It also benefits from decentralization narrative that is on the rise because of BlockFi and the Celsius insolvency that happened a bit back. Community, 6 out of 10. The community is great, but it's nothing crazy at the moment. The Discord is active and moderators are helping any newcomers with questions. Because Alex is so established, the community is there, but it's not as excited as other things like meme coins in the Stacks ecosystem. Team. I'm giving the team an 8 out of 10. They have a great background on the team, right? Extremely good institutions in the TradFi world. They have a ton of experience, and that's been very good for the Alex project. But right now, Alex is lacking a bit of market awareness. People need to understand that DeFi and Bitcoin is a real thing, and it's happening now. Marketing efforts need to increase. Complexity. The more complex, the lower the score. High scores are good. It means it's not that complex. I'm giving it a complexity score of 9 out of 10. Alex isn't doing too many things that are new. They have a DEX and they have a loan book. This is standard. But there are a couple other things that are happening. For people that look further, they can see that there's BRC 20s. There's Stacks 20s coming too. And they have a lot of integration with the Bitcoin L1. Conclusion. Thanks for listening. Make sure to follow me on Twitter at Mesma00. Join the Discord community, Moonmath, which is going to be linked in the pinned comment. And make sure to subscribe to this channel for more crypto content. See you in the next video.